Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Day 2 in Stockholm. Trade talks to resume between Washington and Beijing in Sweden, with Commerce Secretary Howard Lutnick saying a 90-day tariff truce extension is the most likely outcome. A new deadline. President Trump says Russia's Vladimir Putin has about 10 to 12 days to reach a truce with Ukraine or face potential economic penalties. And we have a comeback. Emerging markets are enjoying a revival after over a decade in the shadows. But is the bounce just another false start? It's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. While Wall Street indices continue to creep higher, marginal positive close yesterday for both the S&P and the Nasdaq, ending up once again in record territory, though perhaps without as much of the oomph that you had going into the sessions last week. So moderately higher, but a lot of data points coming up. We've got GDP tomorrow, we've got PCE, we've got jobs data on Friday, in addition to the Fed. So all of that is coming up this week. And don't forget those big tech cap names are reporting as well, the likes of Meta, Microsoft, and Amazon, all to come. So watch out for that later this week. European markets. Well, today, European futures are leaning towards the green, up 0.3%. But I've got to say, it was a case of buy the rumor, sell the facts yesterday, because we saw European indices end very much in negative territory. The Stoxx 500 down about, Stoxx 600, I should say, down about 0.4%. You had the the DAX in Germany, and down more than 1%, pulled down by one sector, which is a bit surprising, the auto sector. So even though the auto industry opened up in positive territory after news of that trade deal, by the end of the day, you had names like Porsche, BMW, all end down substantially, anything between 3 and 4%, dragging down these European indices. You could say the same for the euro as well. Take a look at where we're trading, just shy of 116, 115.80 is where we're at. The euro dropped around 1.3% yesterday in trading as investors took to trimming positions. Perhaps there was a little bit of a long bias in the currency, but again, once again, a case of buy the rumor, sell the facts, of the euro dropping after that trade deal was announced. And then Brent this morning, just shy of $70. We did see an uptick of more than 2% in trading yesterday. This after President Trump said that he wants Russia to come to the negotiations once again for a ceasefire, a potential truce with Ukraine within the next 10 to 12 days, or they would face economic alternatives or potential secondary tariffs. So on the back of that, we saw oil climb about 2% on expectations of a tightening in that market. And then take a look at the USD. We're not quite at the end of the month, but looking back at this month, 1.5% higher for the dollar, the greenback. Remember, so much of this year, the theme was about dollar declines. Every single month, apart from July, we have seen weakness in the USD. This turned around in July. We are up 1.5% so far for the dollar. All right, let's check in also on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, what's on your agenda today?
Yeah, I think it's mostly still about trade. You see a bit of that sentiment fading, and Asia stocks are down for a third session. The drag today is really coming from tech names, perhaps unsurprising given the big tech earnings we have later in the week and a Fed decision that could be contentious. So investors may be taking money off the table ahead of all that. Just highlighting that for a second day, we're seeing the chip-related stocks, the drag in Japan, and we're seeing more earnings downgrades, more earnings misses. As one analyst put it, AI chips are going pretty strong, but outside of that, the industry does appear to be struggling. We're also seeing Hanwha group of stocks surging ahead in South Korea. That's the lift to the benchmark. You're seeing there on reports that its vice chairman is part of a trade delegation to the U.S. So, as I said, it's usually mostly about trade today. Jumana.
Avril, as it always seems to be, Avril Hong in Singapore, thank you so much. U.S. Commerce Secretary Howard Lutnick says President Trump will decide if Washington and Beijing will extend their trade truce by 90 days. Lutnick told Fox News an extension is likely.
They're talking right now, but the decision maker, of course, is President Trump. I'm sure the people who are speaking with China are going to go discuss with President Trump how he wants to play it. He's got an excellent relationship with President Xi, and I think we'll leave that to Donald Trump to decide how he wants to do it. Is that a likely outcome? Sure, it seems that way, but let's leave it to President Trump to decide.
U.S.-China talks are set to resume for a second day today. The Chinese Vice Premier He Lifeng and U.S. Treasury Secretary Scott Bessent led their delegations for meetings into Monday evening in Stockholm. Both sides are looking to extend their tariff truce beyond the initial 90 days. Bloomberg's Oliver Crook is in Stockholm with more on what to expect.
After striking a trade deal with the European Union, the Trump administration is now focusing its energy on China. Secretary of Treasury Scott Bessent and Jameson Greer have both arrived here in Stockholm and are inhabiting for the next 2 days the Prime Minister's office here in Sweden, where they'll be in discussions with the Chinese Vice Premier over the next 2 days. The aim of these talks is to extend the trade truce between China and the United States. Currently, tariffs between the U.S. and China stand at 30%. That is down from the 125% rates that they reached at the height of the tensions with China. The hope from this meeting is to extend that truce for another 90 days past August the 12th, where the current deadline stands. Scott Bessent will also probably be addressing fossil fuel purchases that China still makes from Iran and Russia, the issue of TikTok, which the United States and Trump says there is a buyer for in the United States, China still needs to sign off for, and of course, rare earth metals that China has a stranglehold over and has been sort of threatening to withdraw from the United States in order to get the United States to send those H-20 advanced AI chips to China. And while we're still probably some distance from a meeting between Xi Jinping and Donald Trump, Xi Jinping has extended an invitation to Donald Trump and the First Lady to China, and these sorts of meetings are the ones that will pave the path to eventually getting the full framework of a trade deal with the United States and China.
Bloomberg's Oliver Crook reporting from Stockholm. Meanwhile, the trade deal struck this week between the European Union and the United States is facing growing criticism from within Europe. The German Chancellor, Friedrich Merz, initially cheered the agreement, but now says he expects Europe's largest economy to suffer significant damage from the tariffs. The French Prime Minister, François Bayrou, was also critical, saying it's a dark day when an alliance of free people opts for submission. That is a quote. Now, that is after the EU had agreed to accept a 15% U.S. tariff on most of its exports. A source tells Bloomberg that both sides will seek to clinch a non-legally binding joint statement by Friday that will expand on some of the elements negotiated over the weekend. President Trump, who's visiting Scotland this week, also told the UK they will hear about pharmaceutical tariffs soon.
We'll be announcing on pharmaceuticals sometime in the very near future. We have a very big plan on pharmaceuticals. We want to bring a lot of the pharmaceuticals back to America where, where they should be. We're going to want to be making a lot of them ourselves, all of them in a sense. But you also have a good pharmaceutical business. We'll be dealing with you on pharmaceuticals.
For more on how markets are reacting to the latest news, let's bring in Simon Ballard, Chief Economist and Head of Market Insights and Strategy at FAP. Simon, really good to have you with us on the show. Let's pick up maybe on the European price action yesterday and the fact that even though all of the signals were pointing to the green, by the end of the day, the rally had fizzled out. And you even had autos, which saw a reprieve on their own exports, end the session in negative territory as well. Was it a case of buy the rumors, sell the fact?
To a certain degree, I think, yes. Good morning, by the way, and thank you for having me on. But I think one of the key takeaways from that is the embedded uncertainty in the trade situation still today. While we're getting these trade deals, some positive momentum in the early hours or the early days of post announcement, the more and more we look into the details, the more question marks there are over the medium to longer term. So I think there's been a subliminal shift, if you wish, from what was cautious optimism previously. Now we're looking more at sort of optimistic caution.
Yeah, but at the same time, if you look at the way U.S. markets are behaving right now, it's happy days. You could say it's a Goldilocks scenario. Growth has actually begun to pick up. There are positive signs in the U.S. economy. The Trump administration has started signing these deals. The Fed maybe are not going to cut now, but there is an expectation that they will cut at some point later this year, definitely in 2026 as well. So what could derail that momentum in the U.S. right now? What takes away from this Goldilocks backdrop that we're in?
Well, I guess, the realization that tariffs, as they come through, will be feeding a net inflationary, a stagflationary type scenario over the medium term. Is probably something that's not priced in. As you say, we're priced for perfection effectively, maximum sort of high watermarks in terms of valuations, but, increasingly a higher watermark in terms of the trade tariff uncertainties that we're facing. that's that's probably unsustainable over the medium to longer term, and needs a more nuanced balance eventually. So I think what's going to correct will probably be a shock to the upside in terms of inflation. And that black swan that we've spoken about previously, and which I wrote about at the back end of last year for 2025, would be a net hawkish bias developing with the Fed as it sees that sort of inflationary impact of tariffs coming through, the realization that they're being paid by the importer, the corporate within the US, and eventually within consumer prices, rather than the exporter at the source of exports, be it sort of Europe, China, Mexico, wherever that might be, going to the US.
Yeah, I mean, everyone knows that there's a Fed meeting coming up tomorrow, but I would argue because there's no expectation of them doing anything at this meeting, perhaps what's going to influence markets more this week are the two other important data points coming out. You've got the labor market release, the jobs data coming out on Friday, and then you also have PCE. Both of them will be crucial for market trajectory from here. Which one of those two elements, and of course both of them are within the US Fed mandate, do you think the Fed will be placing more emphasis on? Is it the PCE data or is it the labor market in the coming months?
Well, I think probably PCE in the short term, given that they probably have more room on the inflation side than they do on the growth side. They have more room on the growth side than they do on the inflation side. And given the relative strength and robust nature of the labor market that we've seen recently, and it's not just the employment number on Friday. Of course, we get the JOLTS data later today, which is very much sort of a secondary number, but nevertheless a key contributor, if you wish, to the overall macro picture this week. I think they'll be watching PCE as their preferred sort of inflation indicator probably more closely, given that we had the unemployment rate in the US dipped down to 4.1 from 4.2 rather than increasing to 4.3 last month. As I say, there's more headroom on the growth side than there is on the inflation side. They can't afford to allow CPI and price pressures to start creeping higher again, which would need an even more aggressive hawkish bias over the course of 2026 and a more damaging net impact, longer term impact to the US economy.
Yeah. Simon, maybe bringing it closer to home, we also get GDP prints later this week out of Saudi Arabia. And I'm just wondering whether you think everything that has gone on vis-a-vis tariff discussions, trade deals around the world, whether this is actually going to have a real economic impact on the growth of some of the countries in the GCC.
Well, I think generally we're going to see an impact globally from trade tariffs. We've seen that in terms of the softening of global growth expectations. We're reasonably robust, not necessarily isolated, but reasonably robust here still across much of the GCC, and 3.5% would be a reasonable expectation for those GDP figures from Saudi and the likes later this week. Obviously, the fiscal break even for the oil price at around $50 a barrel for the UAE, when Brent itself is there at around sort of $70 a barrel, is still favourable in terms of government revenues and therefore government investment into diversification strategies away from petrochemicals. So we're still looking very healthy in this part of the world, thankfully. And my forecast of 5.2% real GDP growth for the UAE this year still stands, but that has been softened a little bit from my earlier 5.6% forecast because of the global impact of tariffs and the softer global picture that we're facing in this H2 2025 and into 2026.
Yeah, 5.2% UAE GDP growth. I'll take that. That's a good number relative to the rest of the world. Simon Ballard, thank you so much for coming on. Chief Economist and Head of Market Insights and Strategy for Global Markets at FAB. Now, a gunman has killed at least 4 people and himself at an office tower in Midtown Manhattan. City officials say one of those killed is a police officer, while several people were injured. The gunman was found dead on the 33rd floor of the 345 Park Avenue, which houses Blackstone's global headquarters. Employees say Blackstone staff on the 32nd floor had pushed furniture in front of doors to barricade themselves during the attack.
It is unimaginable to experience a loss of this magnitude. And 3 other innocent civilians are also dead. 2 males and 1 female, and another male is seriously injured, fighting for his life in critical condition because of the violent, despicable attack.
Coming up, raising pressure. President Trump says he will shorten his timeline for Russian leader Vladimir Putin to reach a truce with Ukraine. The details next. This is Bloomberg. President Trump says the U.S., UK, and EU will set up food centers to ease starvation in Gaza. Trump says Israel has a responsibility to ensure aid reaches civilians. UK Prime Minister Keir Starmer backed the comments, saying Britons are revolted by images from Gaza and more pressure is needed on Israel to allow relief in. Saudi Arabia says it will only normalize ties with Israel after the establishment of a Palestinian state. Foreign Minister Prince Faisal bin Farhan reiterated the kingdom's stance just days after President Emmanuel Macron said France would recognize a Palestinian state in September. The minister says there is no credibility for a conversation about normalization with constant death, suffering, and destruction in Gaza. President Trump says he will shorten the timeline for Russian leader Vladimir Putin to reach a truce with Ukraine or face potential economic penalties.
I'm going to make a new deadline of about 10 or 12 days from today. There's no reason in waiting. There's no reason in waiting. It's 50 days. I want to be generous, but we just don't see any progress being made. It would be sanctions and maybe tariffs, secondary tariffs.
Okay, let's talk about this more. Bloomberg's John Herskovitz joins us now. We just heard President Trump there saying that he wants to bring forward that ceasefire truce deadline for the Russian president to come forward, to back to the negotiating table, 10 to 12 days or else. What exactly do we know about what the U.S. could potentially punish Russia with?
Sure. And we're seeing this accelerated deadline for the ceasefire from 50 days to 10 to 12 days as a way to put more economic and diplomatic pressure on Russia. Trump has floated this idea of secondary sanctions, trying to go after the countries that are importing Russian oil. The main ones would be India, we have China, and Turkey. But it also raises a few questions like how would these sanctions be enforced? And also there are trade negotiations going on now with India and China. And this idea of the sanctions on oil could really complicate things for those negotiations. In the U.S. as well, in the Senate, there's pressure being applied to Russia, a bill that looks at adding sanctions and also tariffs on Russia, trying to get Russia to comply. So Trump is sounding frustrated about this. He said that he's doing this, and that's why he's bringing it forward. So whether this can come about is one thing. What could be targeted? We have these countries, and the U.S. could also look at sanctioning some of Russia's ships and oil facilities.
Has there been any response from Russia so far? Has the Russian president said anything?
We haven't had any specific response to the latest move by Trump. The ruble weakened a bit on the news, but for Putin, for the most part, has just ignored or just pushed aside these calls for a ceasefire. He's kept by his maximalist demands, keeping the territory that Russia has seized, making sure that Ukraine never becomes a part of NATO, calling for new leadership in Ukraine. And he may be thinking that Trump may not be able to put the pressure on him, that this will allow him to continue his grinding war, try to get more and more territory, and keep the war going without worries that it's really going to affect his economy. So we haven't seen anything from Russia yet. And if Putin keeps the form, we'll probably won't see anything more. And one other thing, since the first threat came up with this 50-day ceasefire, Putin increased his drone aerial attacks on Ukrainian cities. So we'll see what Putin does.
Yeah. Bloomberg's John Herskovitz, thank you so much. And I should just note that we did see quite a big reaction to the price of oil yesterday after that news came out, those comments. Brent and WTI both shot up more than 2.5% on the potential bringing forward of that truce deadline. So Brent is trading just shy of $70 now, up about 2.5%. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. South Africa is stepping in once again to support Transnet. The government approved $5.3 billion in fresh guarantees for the beleaguered state-owned rail and port operator. For now, we are joined by Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg. Jen, talk us through how significant a step is this and where does Transnet go from here?
Right, Jumana, if you ask many people in the business community, this is significant, especially if you take a look at what exactly these guarantees cover. So half of it, about a half of it, covers debt redemptions, and the other half is helping the company mitigate risks of credit downgrades. This is significant because just a few weeks ago, Transnet actually did get downgraded by S&P, which, they pointed to concerns around the company's balance sheet and also concerns around downside scenarios is what they called it if the government support actually weakened. Clearly, though, we are seeing government support continuing to step in for this company and helping, as they call it, the indebted company become profitable. But many people in the business community also pointing to the fact that there's no silver bullet to fix what we've seen with Transnet. There's still a number of structural issues that we've seen with the port and rail operators, so much so that a Stellenbosch University professor has said the issues with the port operator has cost the economy, about 1 billion rand every day. So these guarantees do go away in supporting Transnet financially, but they don't get to the heart of the issues, which some people have said issues with the leadership, also issues with theft and vandalism, and also operationally, we've seen some of South Africa's ports and rails ranked the worst in the world. And so this was obviously important from a business perspective that the government is stepping in, but it seems like many of those who are here in the economy are wanting to see the Transnet continue to push for reforms internally to hopefully get things turned around for the company and for the economy more broadly.
Yeah, that number from the Stellenbosch University professor, quite stark as well. Jennifer Zabazaja, our Chief Africa correspondent in Johannesburg with that Transnet story. Well, coming up, we discuss real estate demand in Dubai with Emirati developer Binghatti, as well as earnings. That's next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Day 2 in Stockholm. Trade talks to resume between Washington and Beijing and Sweden, with Commerce Secretary Howard Lutnick saying a 90-day tariff truce extension is the most likely outcome. A new deadline. President Trump says Russia's Vladimir Putin has about 10 to 12 days to reach a truce with Ukraine or face potential economic penalties. And coming up, we speak to the chairman of Binghatti, Mohammed Binghatti, after the Emirati real estate developer posted a record profit for the first half of 2025. Plus, a look at passenger numbers in the first 6 months of the year with Dubai Airport CEO Paul Griffiths. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, getting you up to speed on these markets. Another marginal gain for Wall Street yesterday. S&P and Nasdaq ending slightly in the green, but yet again, another all-time record high as we get into a big week once again for earnings. We've got some of those big names, Microsoft, Meta, coming out in the next couple of days. The Fed meeting, jobs report on Friday, GDP data, PCE. It's all happening this week in the U.S. But this is the picture for futures, up 15 basis points. European markets turning a little bit today, up 0.2%. Though we did end the day yesterday in the red, despite the fact that U.S. and the EU agreed to a trade deal. But many within Europe, including the French, were not very happy with the details of the arrangement. The DAX index, the German index, ended the day down 1%. Even autos, which stood to benefit from the tariff reduction, actually ended the session down 3-4%. So negativity in Europe also transpired for the currency, which slipped about 1.3% yesterday in trading, now trading closing with a 115 handle. And then Brent, we actually saw move higher about 2% yesterday on geopolitical news, with President Trump essentially warning the Russian President Vladimir Putin to come back to the negotiating table to agree to a truce with Ukraine in the next 10 to 12 days, or else. And those or else could mean further economic punishment, secondary tariffs, and the like. That is the reason why oil shut up. Switching over, though, just taking a quick look at our terminal chart for today. And this just shows you that the dollar has actually had a really good month so far. It's not technically the end of the month, but still, I just wanted to highlight that for every single month this year, January, February, March, April, May, June, the dollar was weaker. This month, the dollar is on track for gains of 1.5%. Still negative on the year, but starting to turn around. All right, let's check in on how markets in Asia are faring as well. Avril Hong is in our Singapore studio. Avril, just give us a run through of these markets.
Yeah, we're seeing Asia stocks down for a third session. Tech is the drag today, perhaps unsurprising given these big tech earnings later in the week, along with a Fed decision that could be contentious. But we also have that tariff sentiment fading a little. So that seems to be playing out as well, including in China, where stocks are treading water. And we have our MLife strategist also highlighting an interesting point. If you look at the number of trade deals, the flurry of it that's come in, it is not like we're seeing a breakdown of globalization. It's more about a reconfiguration. So that's something that could ultimately be supportive of stocks. And what you're seeing today, the negativity, is more of a breather after a pretty long winning streak for Asia stocks. Jumana.
Avril, thank you so much. That was Avril Hong in Singapore. Now, Emirati real estate developer Binghatti has reported record profit for the first half of 2025, jumping a whopping 172% year on year. Meanwhile, sales rose 60% compared to the first half of 2024, and 61% of those sales were to non-resident buyers, which is also up from 55% the year prior. I'm happy to discuss the numbers and the broader real estate sector with the chairman of Binghatti, Mohammed Binghatti. Really good to have you with us on the show. So much has happened since the last time we spoke. I feel like it's been a very busy year for you. We spoke to your colleague a couple months back about the launch of Binghatti Capital, recently launching London Boutique. But maybe let's just start with these earnings. Very strong net profit, rising more than 172% year on year. What's fueling this performance?
Well, I mean, you may have heard we recently opened our sales boutique in London. We also opened in Riyadh and places like China. So we're definitely extending our footprint in terms of sales presence and really pushing our sales revenues from all around the world. We've been following where the revenues are coming in from and really ensuring that our presence is there physically. So a lot of pressure in terms of sales performance for the organization.
It feels even more surprising given everything that has happened in the region geopolitically and over the course of the first half of this year. Did you see demand dip a little bit? Was there some nervousness out of the types of buyers that would typically come in?
Not at all. I think, if anything, it proved the robustness of the market and the resilience. We've seen the demand continue at all points of time throughout the year. You saw the figures. So sales, half-year sales of 8.8 billion dirhams. And I think it's only going to continue towards the end of the year.
Yeah. How do you see the outlook for prices, for luxury pricing towards the second half of this year? Because everything signals that there is still growth, but perhaps the growth is beginning to moderate.
See, I think there will be room for more growth. If you look at the first half's performance, we've seen a 23% growth year on year in terms of transactions. So that translates to around 263 billion dirhams worth of transactions for the first half. I think that's going to continue. It's going to be driven by an inward migration of ultra-high net worth individuals from different parts of the world. I think it's also going to continue because of the populational growth, which is steadily going towards 4 million towards the end of 2025. And if we continue at this rate, I think we will hit 5.8 million by 2040, according to the figures. So I think we're on an upward trajectory. We're also seeing a lot of stimulus in the market by government expenditure, in projects under Dubai Agenda D33. So a lot of government expenditure going into these projects, creating jobs and really bringing in more people to live and work in Dubai.
What is the split between residents and non-resident buyers for your projects?
Very good question. So 50% of our buyers are from international sources. So 9 out of 10 of our top nationalities are from outside the UAE. And then when it comes to British buyers, of course, you know, they're in the top 5. So that's why we went. That
explains why you opened up the London boutique.
Absolutely.
How has that number evolved over the years? Has there been more interest from internationals to look into the high-end?
Absolutely, absolutely. So that's been growing over the past 2-3 years for us specifically.
Yeah.
And we've made sure to really chase that demand physically, establish boutiques in different parts of the world, in the major cities, and really establish that global brand exposure for Binghatti.
Yeah, and I see that you're also branching into Binghatti Capital. We spoke about that a couple of months ago. How does that sort of complement the ecosystem that you're building up? How does that play into the whole vision that you have for where Binghatti is going?
I think we see Binghatti not just as merely a property developer, but more of an asset manager, property developer, builder. You know, it's a whole ecosystem. And so for us, it's very important to explore many avenues in terms of capital, especially capital that is sort of brought in from international demand. And we saw that in the Sukuk, for example.
Yeah.
You know, 420% oversubscribed the second tap we did, and a lot of the demand was international demand. So very important for us to have all these different sources of capital for the organization to ensure that the growth and the expansion of the organization.
We've spent a lot of time on this show, you know, macroeconomics, talking about the impact of tariff, of supply chain disruptions. Is that having any ramifications on delivery times for you, or projects, or having an impact really essentially on the timing at which you can deliver on these projects?
Absolutely not. And I think that the main reason for that is the vertically integrated business model that we've designed for Binghatti. So, you know, we design, we build, we deliver, we even manage after delivering. It's a whole ecosystem, or a machine built to ensure that no risk occurs in terms of quality, cost, or time in any parts of the supply chain.
So you're not seeing any cost pressures emerge at all as we look into the second half of the year?
Not so much.
Okay,
not so much.
Okay, interesting. Let me just ask you then, just to round things up. You've done so many different partnerships with some of these high-end brands like Mercedes-Benz and others. Do you still see the opportunity in those types of high-end JVs? Is that a draw for some of the buyers?
I think there's a lot of value in these partnerships. I think it definitely gave the Binghatti name a lot of allure in terms of a global brand exposure, but also the Binghatti brand itself. You know, over the past year, it's really proved itself amongst peers in the market. You know, I was looking at the figures of the first half of the year, and we scored 22% higher on average per square foot than other peers in the market in areas like Al Jaddaf, 4% higher in JVC, and 12% higher in Business Bay. So I think definitely there's a lot of value in these partnerships. We are definitely interested in pursuing such partnerships further. But of course, also the Binghatti product itself solely is performing very well.
And Dubai not near a saturation point, you think?
Absolutely not.
No. Okay, one for the next discussion then. Really good to chat to you. Thank you so much for coming on. Mohammed Binghatti, the chairman at Binghatti Holding. Now for a look at some of the other stories we're following today. EU regulators will investigate ADNOC's planned takeover of Covestro under the bloc's foreign subsidies regulation. The inquiry comes amid concerns that state funding from the UAE could hamper fair competition. The escalation sends a strong signal that EU regulators are increasingly wary of large state-backed deals for European companies. ADNOC is contesting the preliminary findings and says it's confident that the transaction will be cleared. Oil giant Vitol delivered a record $10.6 billion to its executives and senior staff last year through share buybacks, the biggest payout in the industry's history. The energy trader's 2024 profit hit $8.7 billion, which is more than 4 times more than its 4 biggest rivals combined. Now, Vitol has now paid over $31 billion to its partners in the past decade, even as profits begin to cool. And coming up, busiest first half on record, we speak to the CEO of Dubai Airports about the resilience of the Emirates in the face of regional turmoil. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. On to another set of results, this time Dubai Airport's passenger numbers. The first half of 2025 has been the busiest on record for Dubai International Airport with 46 million guests. That's a 2.3% increase year on year, despite temporary regional airspace disruptions in May and June. For more, we're joined by Paul Griffiths, CEO of Dubai Airports. I was just speaking to the chairman of Binghatti, and he was saying the same. It was a record first half of the year for the luxury property developer. Also, a record first half of the year for Dubai Airports. So talk us through some of the trends and the volumes that you've been seeing in the first half of this year.
Well, certainly it's been a great first half for the entire city, it would seem. And our average monthly traffic hits 7.7 million customers per month, which is a new record. It cements our position for the 11th year running as the world's busiest international airport, with the busiest month being January, with 8.5 million customers through. Q2 was our busiest so far, 22.5 million customers through the airport. And despite, as you said earlier, some of the disruption we had, that really did not affect our business. And we're still on course to achieve a record year. Something like 96 million customers expected through our doors by the end of this current year. So I think trading results have been very good. Load factors on our airlines very high, and we're getting record numbers of flights, numbers of airlines, numbers of cities in our network. So all good.
Yeah, so 96 million still the target for the end of this year. When do you think you're going to join the 100 million club?
Well, I think we'll be the only member of the 100 million club, hopefully during the course of 2026. We're fairly confident that the airline growth that we're seeing at DXB and DWC will continue to be strong. We've now got a forecast, as you say, 96 million. 2026, we're pretty sure we're going to hit that 100 million mark. 269 destinations served directly from DXB, 92 international airlines, and you can reach 107 countries from DXB. So I think we're not only the world's busiest international airport, but we are hopefully also the world's best connected.
Talk us through the operational impact the brief closure of the Dubai airspace had on Dubai airports, and how you thought about it. Just walk us through the decision-making of what happened during that episode of the Iran-Israel war and the decision-making you had to make right quite at the top of the world's most international and busiest airport.
It was an interesting time, and we were very fortunate that we've consolidated all of our systems into a quite unique airport operations control center, which is staffed 24/7. I was in touch with them throughout the time. Fortunately, the disruption was minimal, and it lasted for a very short amount of time. And the resilience of our customer base, I think, shone through. We were only down 3.9% in the single month during May and June, and down in flights and 5.5% in customers. But we've seen an incredible bounce back, and I think the projections for the year are unchanged as a result of the resilience of the customer base. And I think that's testimony to the fact that Dubai is seen as a very, very good place to live, to work, good for commerce, good for tourism, and very well connected.
Has there been any change in the geographical breakdown of where visitors are coming from?
No, we've still got the same breakdown, with India being our top market, 5.9 million customers during the course of the first half of the year. KSA, 3.6 million, the UK, 3 million, Pakistan, 2.1 million, and the US, 1.6 million. And those numbers really don't change. Certainly, the ranking doesn't change. And as you can see on the screen now, London, Riyadh, Mumbai, Jeddah, and New Delhi being the top five in our route structure.
Yeah. Well, what would you say is the split between passenger transiting and passengers actually stopping at Dubai as a final destination? And how does it impact the profitability, overall profitability of Dubai airports having one or the other?
Well, it's been really interesting because we thought as we were outgrowing some of the other airline and airport combinations across the world that our transit customers would exceed significantly the growth of our point-to-point markets. But the good thing is that actually we've seen none of that. We've seen actually a resilience, particularly in the point-to-point markets. We're now about 60-40% in favor of customers visiting Dubai. And of course, the economic multiplication that brings to the city is enormous compared to those in transit. But obviously, transit customers as well as point-to-point customers both contribute to a very healthy airline network. And we've seen huge increases in airline load factors and large numbers of increases in flights as a result of that.
Yeah. Paul Griffiths, really good to have you on. Thank you so much for joining us today on the show, the CEO of Dubai Airports. Well, Elon Musk says SpaceX will launch Starship again next month. The post on X didn't include any details on a specific date and comes after a recent string of setbacks. Musk vowed to ramp up the rate of launches after the most recent failed test in May, when Starship disintegrated halfway into the flight. And coming up, from Ghanaian stocks to Bolivian bonds, nearly every corner of emerging markets has surged in 2025. We'll discuss the comeback on today's Big Take next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. The global trade war that President Trump unleashed in April shook investor confidence in the U.S. economy so much that it sparked a stampede out of the dollar. And much of that money has washed up in developing economies. Joining us for more on today's Big Take is Bloomberg Emerging Markets reporter Seljuk Gökaluk. Really good to have you with us. And a great Big Take that's up on the terminal this morning, talking about this, what is essentially a decade of underperformance of emerging markets relative to the U.S. and other developed markets' assets. But that's changed this year. And how much of that is on the back of the weakness in the greenback versus the actual allure of investing in emerging markets?
Right. I mean, after a decade of underperformance for emerging markets compared to developed markets stocks and especially U.S. stock markets, this year we have seen outperformance by EM benchmark indices. One thing we have seen is that a weaker dollar, dollar weakened almost 10% so far this year in its biggest decline since 1970s. And this has really helped, emerging markets in terms of diversification and at the same time in terms of valuations.
And is it broad-based rally that we're talking about, or have some regions stood out more than others?
Yeah, it's basically, actually, we can see that the rally in almost every market in Latin America. I mean, emerging Europe, Eastern Europe is one of the, stars of this rally, actually generating on average almost 40% stock markets I'm talking about. At the same time, there is in Asia, in Africa, it's a quite broad-based gains benefiting all emerging markets, including China.
Yeah, that's interesting. Is there a distinction between investors wanting to put cash into hard currency or local currency? Hard currency, i.e. debt denominated in USD, or debt that's denominated in local currency? What would you say has been the mix this year?
I think both asset classes benefited from the flows. We have seen this year actually more than $30 billion flows into emerging market dedicated debt funds. But I can say that in terms of performance, local currency bonds actually benefited more. One reason is obviously weaker dollar and at the same time higher yields offered by local currency bonds. So far this year, actually, they provided more than 10% gains. If you consider that it's been just 7 months, actually it's a great performance.
Seljuk, just at the top of this show, I was talking about the turnaround of the USD in the month of July. Is that a warning sign, do you think, for emerging markets in the coming months, the fact that the dollar has started to strengthen again?
I mean, it's something that actually, yeah, investors are watching very closely because so much depends on the US dollar. A stronger US dollar means, in general, weaker emerging market assets. It means investors are redeploying cash back to the US. But so far, I mean, other than that, I mean, maybe this month's gains, it's hard to say that. And in general, I can say that if the Federal Reserve cut interest rates, or if we keep seeing trade deals with the US and other emerging markets, this should support risk sentiment, and better risk sentiment supports emerging market assets.
Yeah, that's fair. Less trade uncertainty in the world will probably lift all boats. Bloomberg emerging markets reporter Seljuk Gökalp, thank you so much. And for anyone who wants further analysis on anything we discussed on this article, you can just go to our Big Take today, NI Big Take on the terminal to read it in full. All right, here's a look at equity futures. Things are turning around in Europe after a pullback yesterday. European markets are poised to open up 0.2%. S&P and NASDAQ are also leaning towards the green as well. So it looks as though we are in for a risk-on day, unlike yesterday, which, of course, was a day of buy the rumor, sell the fact. That is it for Horizons Middle East and Africa. I'm Joanna Bersacci in Dubai. Stay with me for Daybreak Europe.